So, half of the tax year in Britain has already passed. The tax year runs from April 6th of one year to April 5th of the next year. And after April 5th, you can start submitting your self-assessment tax returns. However, besides filing the tax return, we also need to prepare for tax inspections, estimate our taxes in advance, how much we'll need to pay, and plan how to wrap up our year. So in this video, we'll go over the approaches to recognizing your income and expenses, the different methods of recognition, which expenses are allowed and which are not, and which ones you can't claim in your tax return, so that you're prepared for your year-end results. After all, every entrepreneur who uses the income and expense method must keep a record book of income and expenses. You can download it from the link in the video description. So, let's get started. What do we declare in the self-assessment declaration? There, if you are an entrepreneur, you declare your entrepreneurial income, but in addition to that, also other income you received as an individual. This could be salary, it could be interest from deposits, it could be dividends, sale of assets, gifts, and other winnings. So, if we receive dividends as a business owner, we might not even be entrepreneurs, but we still have to file such a declaration. If we have received any other additional income besides our regular salary, we absolutely must declare all of it comprehensively in the official self-assessment declaration process. That's precisely why not only self-employed individuals, but also those who are ordinarily employed, can file such a comprehensive declaration. This includes individuals who receive income from various sources, such as rental properties, financial deposits, the selling of valuable assets, or indeed, other diverse types of economic activities. We show everything in a single declaration, both personal income and business income, as well as the expenses related to our business. If you are simply declaring your own income as an individual, then in many cases, of course, you do not recognize personal expenses. There are nuances you need to ask your accountant about. For example, if you have sold valuable items or property. When do you need to file your declaration? What are the deadlines? If you are submitting a paper declaration, it must be filed by October 31st. And if you are submitting the declaration electronically, then the deadline is January 31st of the following year. But you should pay attention to the fact that when submitting an electronic declaration, very often you might not yet be registered in the electronic tax cabinet. And this needs to be done before you register. This is a very important point to pay attention to, so you don't wait until the last minute to register or submit your report. But you should also pay attention to the fact that it's better to prepare your reports throughout the year, plan your own income during the year, and then it will be easy for you to pay the tax when you file your declaration. Those who filed declarations last year as self-employed individuals, pay attention to your tax calculation. After all, you may have an advance payment calculated for the next year, which needs to be paid by July 31st of the following year. So, if you delay this part from April to July, it could happen that you pay the advance payment, but, for example, this year you had losses, and you would actually need to file for a refund. To avoid giving yourself unnecessary extra work, it's better to file your tax return in April or May. The fine for late submission of the tax return or for not submitting it at all is £100, so it's quite expensive. Let's take a closer look at income and benefits. You probably all already know that the personal tax-free allowance in Britain is £12,570. What does tax-free allowance mean? It's the amount of income an individual can receive without having to pay income tax on it. And for entrepreneurs and self-employed people, there's also national insurance in this tax year. This amount isn't calculated solely for business income or just for salary. It's calculated based on the total income of an individual for the tax year. If you earned more profit, then you'll have a different rate. That's 20%. The 20% rate applies to the amount from £12,571 up to £50,270. If your profit exceeds that amount. Please note, when I say profit, I mean both profit from business activities and, in general, all your income. That is, it's the total amount you earned in a year. If your total annual income, your profit for the year, falls between £50,271 and up to £125,140, then a 40% rate will apply. If your income is already more than £125,140, then in that case the rate will be 45%. Please note that there are also cases where the personal allowance is reduced. If your income, your profit, exceeds £100,000, then every additional pound you earn reduces your personal allowance, the one that's £12,570, by 50p. So, your personal allowance will be reduced, and if your income exceeds £100,000, it's usually best to consult an accountant to properly calculate your tax return and plan your taxes correctly. Please note that our taxes are not calculated in the usual way on the entire amount you earn. No, the tax will be calculated in portions. So, for the first £12,570, you'll pay a 0 rate. For the portion of your income that falls under the basic rate, you'll pay 20%. For the portion that falls under the higher rate, you'll pay 40%, and so on. So your income will be divided into portions, and a different rate will be applied to each portion. If you also need to declare dividends in your tax return, it's important to note that dividends are taxed at different rates, not the ones we apply to regular individual income. For the first time, dividends have their own personal allowance, which is not taxed. This year, it has been reduced to £1,000. Also, the basic rate for dividends is 8.75%. The higher rate, that is, for that portion of income, will be 33.75%, and the additional rate is 39.35%. Also, if you are self-employed, you will have to pay an additional tax for yourself. This is national insurance of either Class 2 or Class 4, depending on your income. Please note, if your profit is between £0 and £6,725, then in this case you are required to pay Class 2 national insurance in order for your pension record to count. If you don't do this, your record will not be credited. And if your annual profit, which is the total financial gain you achieve, is more than £6,725 and extends up to £12,570 during this current fiscal year, then in that specific circumstance, your insurance coverage is automatically credited and fully paid for, meaning you absolutely do not need to make any payment for it yourself. What is the tax rate? The tax is calculated weekly, and this year it has increased a bit. It's £3.45 per week. If your annual income, after all deductions, significantly exceeds the threshold of £12,570, then you will indeed need to pay Class 4 national insurance contributions as a self-employed entrepreneur. Class 4 national insurance has percentage rates and will be charged on income from £12,570 up to £50,200 at 6%. And the income that exceeds £50,270 will be taxed at a rate of 2%. Note that this year the rates have decreased, which is a positive thing for business. So, when you calculate your income in general, you need to keep in mind that a certain amount of personal allowance can be applied to each type of income. What is this personal allowance? It's the amount that is not taxed. We've already talked about the general personal allowance. That's £12,570. That's the personal allowance, the amount that applies to all income. But in addition, you should remember that the first £1,000 of self-employment income is also not taxed. Also, the first £1,000 of property income, the first £1,000 of interest income from deposits, and the first £1,000 of dividends are not taxed. And you can also take advantage of the marriage allowance, which is £1,260. It allows you to transfer part of the unused personal allowance from one spouse to the other, thereby reducing their taxable income. So, there are different ways to apply these allowances. And if you're not sure which one to use correctly, of course, it's better to consult an accountant or seek professional advice. If you have only one type of income, then, in principle, you can calculate everything yourself. I also want to point out that when we use the trading allowance for self-employment, then we can't claim our expenses to reduce our profit. So, using the trading allowance, it is economically justified only for those who provide services or receive income as self-employed individuals, for example, from work, construction work, or other types of work where there is no material component, no material expenses that they invest in order to perform these jobs, or there are no employees who additionally perform this work. So this is just one case. In all other cases, you need to keep track of your expenses. Why? Because they will clearly be more than £1,000 in your business and, of course, will be able to reduce your taxable profit. Let's take a look at an example calculation of how the annual tax amount will be determined if our entrepreneur has an annual income of £85,000. How exactly will the tax amount be paid? Let's see. I've drawn a small chart for you here, where the amounts are immediately broken down according to the different tax rates. So, the first 12,570 are taxed at 0%. For the next 37,700, you have to pay 20%. For the next portion, you have to pay 40%. Yes, and here I've already calculated these thresholds for you. So, on this kind of chart, we can mark our income and break it down into these small segments. The first 12,570 will be taxed at a 0 rate. The next 37,700 will be taxed at a rate of 200. Then, 85,000 minus all these amounts we've already accounted for in the tax calculation leaves us with 34,730. We tax this amount at 40% and get the total sum of tax that must be paid in this declaration. That's £21,432, which is approximately, if you calculate the average tax rate, 25% of the total profit for such an entrepreneur. Let's look at another example. For example, how can we have a salary, pay taxes on it, and have those taxes withheld by our employer every month? And, in addition, have some entrepreneurial income on top of that salary. So how will our tax return be calculated in that case? How do we calculate the taxes correctly? So, over the year, Maria received a salary of £15,000. £3,000 of tax was withheld from that amount. Maria also received £500 in interest from her savings. And in this case, how much tax can Maria get back? We have a question. So in this case, Maria received two types of income. That's her salary and interest from savings, meaning interest from some kind of bank deposit. Let's do the calculations together. So, we need to apply the personal allowance to the income in the form of salary. That is, we subtract 12,570 from 15,000 and we get 2,430. So this is the income, the profit, that needed to be taxed for our Maria. The tax on the salary at 20% will amount to £486. But her employer withheld a full 20% from her, starting from the very first pound of her salary. That's why Maria can file at the end of the year. She can apply for a tax refund, or in other cases, when she leaves Britain or stops working and doesn't get another job. You'll also hear about all these specific details of tax refunds on our channel. You can watch separate videos about them. So, in different ways, she can claim back those £2,514 that her employer withheld from her. She also had dividends, or rather, interest. She also had interest from a deposit. These £500 of interest are not taxed at all, so they aren't shown in the tax return, because they're less than the allowance that applies to interest, which is £1,000. How will the refund actually happen for Maria if she works at a company? If she continues to work at the same company, there will be an automatic recalculation, and this money will be credited to her at the end of the year. If Maria has left that company, a recalculation will be done for her and the money will be refunded to her later from her new place of work. Or there may be another way. If she has quit and is not working anywhere, then she must independently submit an application through the job centre or on her own, through her tax account, to get such taxes refunded, or use the services of an accountant in Britain who can help her do this. If you are an entrepreneur and you calculate your income and expenses, you can use different methods to keep track of your income and expenses. What are they? The cash method. This is a method that records income and expenses based on when money actually comes into or goes out of your account or cash register. That is, when you receive money, that's your income. When you spend money, that's your expense. The accrual method means you recognize income at the moment you issue an invoice to your customer, and you recognize expenses when you receive an invoice from your supplier. Is that clear? So here, it's based on the documents you issue, not on the actual movement of money. For example, you might have an invoice that hasn't been paid yet, but you still need to recognize the income. You need to pay attention to this. Self-employment profit is calculated, as I mentioned before, as income minus expenses or income minus markups. If we use a trade markup, then we are not allowed to recognize expenses. If you use expenses, that is, you keep track of your expenses and reduce your income by those expenses, then you are not allowed to use the £1,000 trading allowance. This is very important. You need to be aware of this. Additionally, it's very important for self-employed people to know that not all expenses are allowable. What do allowable and non-allowable expenses mean? Allowable expenses are those expenses that you are entitled to claim as business expenses. Non-allowable expenses are those that you have paid for, you spent the money, but you are not allowed to claim them as business expenses. Allowable expenses are all expenses that are directly and explicitly related to your business. You need to remember this. If these are other expenses aimed at another business or at developing some other skills that are not specifically used in your business, then you are not allowed to claim them as expenses. Or, for example, if these are fuel expenses, but you use the fuel for personal purposes and not, say, for delivering goods to a client. Well, in that case, you also do not have the right to claim them as expenses. You can choose different ways to manage your expenses. There are two of them. You can recognize simplified expenses for certain specific types of costs, for example, expenses for housing, fuel expenses, or expenses for accommodation at the workplace, for living at the workplace. You can also apply a detailed calculation to these same types of expenses, distributing all your bills according to the area occupied. That's it. Or you can keep a detailed record of expenses for fuel and write off fuel expenses based on your trip logs, your specific mileage, and your vehicle's fuel consumption, which will complicate your accounting. That's why, of course, smaller businesses choose the simplified expense method rather than the detailed one. Let's take a closer look at the simplified expenses specifically. So, simplified expenses are applied to vehicle management, that is, fuel expenses, in other words, working from home and making adaptations to living on your business premises. As for simplified transport expenses, here's how they are calculated. For the first 10,000 miles driven, you actually count the miles, you deduct 45 pence per mile under the simplified expenses. If your mileage exceeds 10,000 miles, then for all subsequent miles, it's 25 pence per mile. If it's for motorcycles, then it's 24 pence per mile. And, in this case, you can only deduct expenses that are specifically related to your activity and directly used in your business. You are not allowed to claim non-business expenses. The next type of expense is working from home. Under simplified expenses, this is only recognized if you have worked 25 hours or more from home. So, if you have a workspace set up at home and your workload is more than 25 hours per month, then in that case you have the right to claim simplified expenses. If it's less, say 10 or 15 hours a month, then you do not have the right to claim these expenses at all. So, if your workload is between 25 and 50 hours per month, then you can deduct £10 sterling. If your workload is from 51 hours to 100 hours, then it's £18. And if it's more than 101 hours, then it's just £26 per month. That's why, when it comes to calculating work from home expenses, the detailed calculation method is usually more advantageous, the one where you calculate proportionally based on the area you occupy, and then proportionally divide all your bills for rent, electricity, gas, and so on according to that area. This option will, of course, be better for you, but it is also more labor-intensive to calculate. If you live on the premises of your workplace. So, when can this happen? For example, when you have a cafe that has living quarters and you live in one of the rooms, while downstairs, for instance, you have the cafe. Or you have a hotel where you also live directly, or other similar situations. It often happens that there's a small shop on the ground floor, and above it you have living quarters. In such a case, you can claim simplified expenses for living on your business premises. If one person lives there, you can deduct £350. If two people live there, then it's £500. And if more than three, then it's £650 per month. Now let's take a look at what other expenses you can claim in your business. What expenses are allowable? These are office expenses, everything related to the phone, stationery, and other office supplies. However, you need to keep in mind that the phone must be used solely for the office and only for business purposes. If you use it for personal reasons as well, then the subscription fee needs to be apportioned accordingly. And if it amounts to £10 or £25, it's ridiculous to take a sample of your calls and calculate how much should be allocated. So in that case, it's better not to include the phone as a business expense. The same goes for the internet if you work from home and use it for both personal and business purposes. Travel expenses, we've already covered those, can be claimed. Next, clothing expenses. Clothing expenses can be claimed, but only for special workwear, meaning clothing that you use exclusively at your workplace and nowhere else. For example, what could this be? For construction workers, it's the special clothing used in construction, helmets, uniforms, and so on, or there are other options. For doctors, it's the white coats they wear at work, white or blue coats, whatever your uniform is. Or if your company has uniforms, you can also write off the cost of uniforms as expenses. Personnel expenses, meaning salaries, social contributions, national insurance, taxes, and so on. So, all of this can be counted as expenses. Items you purchase for resale, that is, the cost of goods you then sell on. Financial expenses related to maintaining bank accounts or servicing business loans. Expenses for business premises, that is, costs for the office you rent. Advertising and marketing, of course, can be included as your business expenses, as well as training courses that are specifically intended to help you develop in this particular business. For example, if you are actively engaged in the trading of goods and you decide to take a comprehensive course in marketing and sales, then such a valuable course is an eligible training expense for full reimbursement. But if you take a driving course for yourself, even if you deliver goods, well, that is not an allowable business expense. That's why you need to look into this in detail, what can be classified as an expense and what cannot. Let's go through another example together of how we calculate profit from activities and the taxes on that profit. Again, I've made a list for you, a sort of chart. Let's read through the example. You have an annual income of £135,000. Type of activity, trade. Expenses for purchasing goods amount to £70,000. Warehouse rent expenses are £8,000. Transport expenses are £18,000 miles. And the cost of an accounting course is £500. What amount of profit tax will be paid? So, in this case, we first need to calculate the expenses. First, the transport expenses are given in miles, so we need to calculate the cost per mile. That will be 0.45 times 10,000 because there's a slightly higher rate there, and for those over 10,000, that's 8,000 miles, calculated at 0.25 each. The total amount of transport expenses is £6,500. The profit will be 135,000 minus 70,000, minus 8,000. 8,000 is our rent, 70,000 is the cost of goods, and minus 650 the mileage expenses. Note that here we are not subtracting the expenses for the accounting course. Why? Because you are engaged in trading. If you were doing accounting, outsourcing accounting services, then of course that would be your expense. But in this case, it is not considered a direct business expense. However, if you pay an accountant for accounting services, that will be a business expense. Now let's calculate your income tax. We'll break it down into parts. We have 37,700, which is taxed at a rate of 20%. Well, we just didn't write down the part that's taxed at 0, and £230, which will be taxed at a rate of 40%. In total, the tax is £7,632, which amounts to about a 15% tax burden on your income. And one more thing, marriage assistance. The thing is, a husband and wife can share their allowance. How do they share it? They're only allowed to separate 10% of the allowance. No more than that. That's why we might have a situation where, for example, the husband earns more, the wife earns less because she's still with the kids and can't work full-time, so she can transfer a portion of her allowance to her husband. Let's look at some examples to see how you can save. In this case, we have a husband and a wife. The husband's income is £35,000. His personal allowance is £12,570. The wife, her income is £10,000, and her personal allowance is also £12,570. So, in this case, we see that the wife earns less than the personal allowance. Overall, the family's income tax that currently needs to be paid from this income is £4,486. But if the wife transfers £1,260 to her husband, then her personal allowance decreases to £11,310, while her husband's increases to £13,830, and the tax the family saves will be £252. So, thanks to this kind of transfer, we can also save on the family's taxes. However, I want to point out that this allowance is available both for entrepreneurs and for ordinary individuals. That is, everyone can take advantage of it, but only those who are in a couple. We've just gone over the main aspects with you. I hope you now have a bit of a clearer understanding of income and expense accounting. One more thing I really wanted to emphasize in detail is that any expense you heard about here needs to be supported by original documents. That's why, to support your declaration, you need to provide your accountant with your income and expense journal, as well as documents that confirm your expenses. Only then will they be able to file the declaration using the expense method. How to keep an income and expense journal and what it actually looks like, you can download it from the link in the video description. Subscribe to our YouTube channel, and we'll definitely tell you all about it and show you how. You can use paid software, or you can simply fill out a form in Excel that's been specially designed for you. Download it below. If you need to file a declaration or require additional consultations for your business, feel free to reach out, we'll help you. Subscribe to our YouTube channel, check out our services on the Kairos-K website, and call or book a consultation. I'll be happy to consult with you and help.